All right, everybody. Stocks by the numbers. Welcome back. Today is Friday. We got about 2 hours to go here before the close, but I wanted to do a quick update here on one of the biggest flyers that we've seen here on this channel. Again, if you recall, not to pat myself on the back, but I brought it up in a previous video several months ago talking about SMCI, saying this is the type of growth in revenue quarter over quarter, year over year that you should be looking for. These are the types of stocks that are going to grow over time that you, in my opinion, should be investing into, especially for the long run, not just the short-term plays. And of course, what happened as we see the stock from the low 300s all of a sudden starts pumping up 30%, runs into the 500s, and of course they come out with earnings and absolutely decimate these analyst expectations, upping future yearly revenue about 30 to 40% higher than what analysts were first expecting. And of course, the name of the company we're speaking about is Supermicro Computer Incorporated, ticker symbol SMCI, listed here on the NASDAQ. Stock right now just dipped below $834, down 170 points today, taking a 17% hit. But hey, when your stock runs from 307 all the way up to new all-time highs of $1,077.87, guess what? You might have to take a red day in there somewhere, right? So, of course, when I originally made that video doing the last update at roughly $500 a share after they came out with earnings, I said, in my opinion, very conservatively, we can see $750. Realistically, this is at least $1,000 stock, if not more. And obviously what we see here is that the stock basically beelined to almost $1,100 a share. So even if you bought in late here at 500 thinking you missed the boat, you made over 100% just within a couple of weeks. But I wanted to show you something very interesting here on the technical side, right? Now this is coming back to January 18th, as you see, and see how it dipped down and then it slightly started to tick higher, right, before it had that big explosion. So what I did was I went from the low of this candle here, as you can see, top left of the screen, the O, the H, the L, the C, that is the open, the high, the low, the close, and you can see the low 307.20, right? So I went from that point, and you can see how I just rode along the bottom of the next couple of candles there. Okay, and I kind of just drew that trend line out, and then I went to the settings here and I extended the right line, and what that does is that basically extends it infinitely. Okay, and it's very interesting because I know people are very upset about this sell-off, but look at this. Look at this. Look at this. Up. Would you look at that? So it comes right down to that trend line. Now, granted, of course, we did have a really big run. So even though it is, coming down right in line with this trend line that I just drew out for you, of course, there's no guarantee that it's going to immediately bounce off of the trend line and go back up to 1,000 plus. We could potentially make the argument that, we had a little bear flag forming here, so it just broke down to the trend line here. Now we could potentially have another bear flag forming and we can drop it back down. It looked like maybe like right here. This is what I was kind of looking for, perhaps, if they did start to sell it off. Maybe they'll bring it back down to the low, mid 700s before potentially taking it the next leg higher, right? Because obviously, the way I'm looking at it, I don't know about you, but the way I'm looking at it is if you immediately beeline this stock from $300 to almost $1,100 a share, then chances are it's probably worth somewhere around here at least, right? That's just my opinion. But looking at the numbers again, and more importantly, looking at some of the recent news articles that came out, I actually have to say, in my opinion, believe it or not, I think this is a $2,000 stock. And I know you might be taken back by that, but again, the company forecasted, I believe it was like north of $14 billion they're expecting now for 2024. Original estimates were like 10.5 to like 10.8 billion or something like that. So the company seriously boosted up that forecast, right? And now we have a market cap after the sell-off down here at 47 billion, which would be a little over 3 times that $14 billion mark. Okay, and now the PE has obviously pumped up here. It's at 78.5, even though we've looked at a lot of other tech companies, and even a PE up here close to 80 could still be considered undervalued for future growth. And remember that technically they say that stock price is based on future earnings and future growth. And I just want to show you this forecast here. First of all, I mean, just look at that growth here. It cannot be denied. Going from about that 3.5 billion and change mark that it was holding for a few years up to north of 5, up to north of 7. Now they're expecting to double that into 24, looking for north of 14 billion. Let me tell you something, folks. In my opinion, when I see numbers growing like that annually on the revenue side, the stock is worth more. But of course, that's just my opinion. But I wanted to come down here. Very important. First of all, I find it very interesting that someone has a strong sell on this company and this price target down here. So I'm assuming they're late to the party, and hopefully they would be reevaluating the situation, because in my eyes, after what we've been seeing here on SMCI, if you're maintaining a strong sell with a price target at 250, you're just out of the loop right now, in my opinion. But it's funny because I feel like they try to rain on the parade when the word is out. And in my eyes, I view that as them kind of almost subtly advising you that, oh, maybe you should take the money and run. You know, you're up big. This might be the time to sell. And it's interesting because the stock just went on an absolute frickin' tear, and everyone is expecting even more future growth to come. So unless, and again, I understand we're all in different financial situations. Sometimes we have to take profits right away. I understand that. But for the longer term investors here, I completely, in my opinion, disagree with their analysis here. I don't know what these people are talking about. I don't know why they would even say it, which again leads me to believe that they're basically, again, subtly hinting that they want you to sell your shares, so of course they can buy them. And it's interesting because if we move forward here, we can see that revenue expected to jump up into the higher 4 billions here within a couple of quarters. And now we can see going into about midway 25, now we're going to break into the 5 billion a quarter. And if we switch over here annually, again, you can see for 2024, look at how stable this company has been. Even on the EPS side, look at that. That's what I mean. You know, one little miss in a quarter here, I'll take that all day when we're talking about long-term growth, right? So here, 14.5 billion. Look at 25 though. Expected to jump to almost 20 billion. So that's another 40% increase year over year in revenue going from 24 to 25. But remember, stocks are supposed to trade based on future growth and forecasts and expectations. You know, it's based on future value, supposedly. So right now, we're in 2024. They're expecting 14.5 billion. So again, looking at the current market cap here at 47, we'll call it, you know, we're trading less than 3.5 times annual revenue, which for a tech stock, in my opinion, based on what we've seen with other companies, is a severely low multiple. And of course, on top of it, not many of them are chunking up their forecasts in revenue and growing at this same rate. And on top of it, not all of those tech stocks, you know, companies like Shopify, Airbnb, right? I mean, I understand that they're growing, but they're not growing at this rate. And if you look at the money they're bringing in compared to their market cap, I mean, we're talking 8, 10, 12 times yearly revenue, right? Yet for some reason, once we hit like that 3.5, 4 times 14.5 billion mark on the market cap, all of a sudden we take a 17% hit, and I'm seeing headlines saying, oh, maybe you should take the money and run here. I saw one article saying, oh, the AI is already priced in. Yeah, oh, okay, buddy. So basically, what I'm saying is that if revenue is looking to jump up to almost 20 billion, then in my opinion, conservatively, this stock, based on what we're seeing in the tech sector, especially with the companies involved in the AI sector, what we're seeing here, in my opinion, is that we should probably be valuing this stock at almost 5 times this annual number, which of course would bring us to about $100 billion market cap, which would be a little bit more than double this number, which would bring us to about $1,670. So that's why I'm saying If and when, more than likely in my opinion, that does come to fruition, that the stock really does start chunking up and staying above that 1,000 mark and starts to climb into new milestones, 1,300, 1,500 a share, chances are everyone will more than likely continue to pile in, seeing that it's a big winner, a high flyer, a fast grower. And that's why I'm saying, in my opinion, I am looking for a market cap of at least 100 billion on Super Micro Computer Incorporated, SMCI. And that's why I'm saying on the conservative end, I'd say 1,700 a share. On the more realistic end of what this company does and how its quote-unquote competitors have been performing, that's why I'm saying, in my eyes, this is probably going to be a $2,000 stock one day. Of course, pending if the company does a split during that time frame. But you understand what I'm saying. I, in my opinion, see some serious growth here. And I just wanted to bring up here, where was it? Okay, Supermicro stock slumps after analyst says AI boom is priced in. Well, with all due respect, the AI boom is probably already priced into Nvidia as well. But that stock, as we know, has flown to heights that are just absolutely unrealistic. So, you can't reward all the other companies in the AI space while at the same time saying it's already priced in for SMCI, and these heights of the stock could be potentially the ceiling and the cap, and we might start pulling back from here. Supermicro stock has gained 214% this year, more than tripled. Growth potential of its high-end AI servers, which are often filled with NVIDIA GPUs. Okay, fair enough. That seems to be too much for Wells Fargo analysts, who initiated coverage on the shares on Friday with an equal weight rating and 960 price target. Okay, so this guy's being ultra conservative for some reason. Stock almost hit 1,100. I don't know how you have a 960 price target. Supermicro shares are, quote, already discounting solid upside, he wrote. We believe shares will be highly susceptible to any indications of tempering GPU-based server demand. What is this guy talking about? Honestly, what is this guy talking about? The analyst believes at the current valuation, investors expect Supermicro to generate more than $30 billion in annual revenue in the coming years. Now, obviously, if that comes to fruition, my $2,000 price target may actually be undervalued. More than double the current Wall Street estimate for this fiscal year, right? Because again, they're expecting about 14.5 to 15 billion here for this year, so they're expecting growth to 30 billion in annual revenue in the next couple of years. We remain, quote, cautious on increased competition in the AI server market from traditional vendors, he wrote. Yeah, well, guess what, buddy? If there was increased competition in the AI server market, as you so eloquently stated, then chances are they wouldn't have just beaten revenue estimates by almost 25%, and they wouldn't have pumped up their annual forecast revenue by almost 40%, right? If there was increased competition, you call for a plateauing or a potential slowdown of your future revenue. You don't pump up forecasts by 40+%. So I have no idea what this guy is talking about. That's just my opinion, of course. Barron's readers are familiar with the Supermicro story. In December, we said in a cover story that Server Maker is one of the three companies best positioned to take advantage of the AI infrastructure build-out inside data centers. Okay, so it's one of the best positioned companies, but at the same time, it's too high and it's going to run into competition and you think it's going to go lower. All right, yeah, so that makes sense, I'm sure, somewhere. In late January, Supermicro delivered stellar quarterly results and raised its fiscal 2024 revenue forecast significantly to a range of $14.3 billion to $14.7 billion, above a prior forecast of $10 to $11 billion. Right? But you think, oh, the AI boom's already priced in and now there's going to be competition. Of course. After the earnings report, Barron's wrote that the 800 level looked like a, quote, reasonable level for Supermicro shareholders to take profits. Now, I want you to think about this for a second. When's the last time you were involved in a stock and you read something like this? all of a sudden, they feel that it's a, quote, reasonable level for shareholders to take profits. Why would they say that? And again, on this channel, again, I look at a lot of the numbers. I don't look at as many technicals maybe as some other traders and investors out there. But again, when we're talking about the long run, in my opinion, I always say the fundamentals trump the technicals for sure. And it's very interesting because even conservatively speaking, when we looked at it at 500, right? I said 750 to 1,000. A lot of people in the comments were like, yeah, that's great news. The company beat earnings. They upped their forecast. I definitely agree. We're going to see 800, 900, 1,000. So you guys all saw what I saw. But somehow Barron's feels that the $800 level, which of course got absolutely decimated and the stock hit 1,077. For some reason, Barron's feels, 800 is a reasonable level for you to take profits. Do you see how this works? This is why I always bring up that infamous George Carlin line. Because when it comes to reading these headlines and these news articles that they put out for these stocks, it's all bullshit, folks. It's all bullshit, and it's bad for you. Now imagine you actually accepted this and sold this stock at 800. And then chances are, in my eyes, you're probably going to turn around 3 to 6 months from now. The stock's going to be at 1,1600 a share. So how can you say that 800 is, quote, a reasonable level to take profits? Even the hottest AI stock doesn't grow straight to the sky. I guess this guy doesn't keep an eye on Nvidia, which literally goes up every single day. So I have no idea what this individual is speaking about. In my eyes, if I got into that stock recently at the low 300s when we looked at it, and you know what? Forget about that. If I got into the stock right there at 500 when I did the last update video, after seeing the way that the stock ran and what the company is forecasting in the future, why the hell would I sell at $800? Which leads you to ask the question, again, like I've said multiple times so far in this video, what the hell are these people talking about? So all AI and tech stocks can fly to the moon and go to these ridiculous, unrealistic valuations, but not SMCI, right? It's too high. It should be 800. That's a good level. But again, we look at stocks like Airbnb trading what? 10, 12 times annual revenue. Shopify, companies bringing in a couple of $1 billion. I think they have like $100 billion market cap valuation. I don't know if they came down recently, but I'm just talking about the last time I looked at it. And if you look at Shopify numbers, they are nowhere near growing as much as what we're seeing here with SMCI. So a crappy random app stock can trade 10, 12 times yearly revenue, but a company in the AI server space who is forecasting, look at this, double revenue growth and then another 40% increase the following year, you think, roughly 3.5, 4 times annual revenue and an $800 stock price, you think that's too high, and you think AI is already priced in, and this might be short-lived and the stock might continue to sell off. I have no idea what these people are talking about. In my eyes, every single analyst should have a strong buy overweight rating on SMCI. Price targets now should be $1,000 plus, in my opinion. And anyone who would say something like that, in my eyes, seems extremely foolish. Wells Fargo starts coverage with equal weight 960. I have to assume they're just playing it safe. I really have to assume that. Why this SMCI analyst is bullish, quote, revenues can grow even faster. Supermicrocomputer to deliver, quote, strong revenue growth in coming years, B of A says. Supermicro up big, but technicals warn a pullback is possible. What kind of statement is that? What kind of statement? You know what? If these people get paid the way they do to do what we're seeing, then I should be paid millions of dollars every single year. Are you kidding me? It's up big, but the technicals warn a pullback is possible. I could do that all day. I could look at any stock right now. Oh, I'm looking at Amazon. You know, the numbers look good. It could go up. The technicals look kind of iffy. It could go down. Thanks for reading. Like, what the hell kind of headline is that? Supermicro. Stock surged over 900% in a year. Why B of A is making a, quote, buy call. And remember, they just began coverage near this level. And they're giving it a buy. But it just I was just laughing, man. It really literally made me burst out laughing when I read price target increase from 691 to 961. I don't know. That must be their favorite numbers, I guess, 169. So they stayed with that with those numbers, but maintains overweight. Barclays. Basically, everyone is seeing the growth that SMCI is bringing to the table, and they seem to be pretty pumped about it. But it was that article there. And where was it again? See, now I can't find it. Yeah, the AI boom is priced in. I just cannot believe what I'm reading. I really can't believe what this article is saying. Even reiterating the forecast up over 40%, and then a, quote, reasonable level for Supermicro shareholders to take profits? Yeah, because again, in my eyes, over time, they're probably going to end up pricing this like the other tech stocks in the space. And if they do, again, we're talking 10, 12 times annual revenue. So now at $14.5 billion, 10 times that number is $145 billion market cap, which would be 3.5 times where we are now, which again would translate to $2,400, $2,600 a share. See, so of course, again, that's not where it's going to go. That's not what I'm saying. But if we value them more like its quote-unquote competitors, then yeah, 2,000 in my opinion is a layup here with SMCI. But you have the audacity to come out and say, quote, 800 would be a reasonable level for SMCI shareholders to take profits. Boy, you crazy. It's that simple. We don't have to look at any of the numbers here. First of all, we did that last time. Second of all, they're phenomenal and they're growing. As we see now, the stock is taking a hit. It's down almost 19.5%, and you can see it just actually ticked down below that support trend line there that I drew out. Look at that, just broke down there on the daily. So we have to see where it closes, if it's able to reclaim that line. But look at that. And again, I have to bring up, this is why, in my opinion, you invest for the long term, right? I told you guys many years ago, back here when I was just a lonely little broker, I mentioned that I used to always keep an eye on this stock. It was in this downward consolidated channel. Look at this, lasted about 3 years. The stock was as high as about 40, went as low, look at that, to about the mid-teens there, to about 16, just hung down there in this long-term consolidated channel. And if you looked at the numbers, or if you were worried about, just taking profits after a month or two of buying a situation, then obviously you miss the big picture with a situation like this. Because if a company is staying down here in this consolidated range and they have limited debt and, they're not bleeding and having massive losses quarter over quarter, year over year, if revenue is remaining stable or growing quarter over quarter, year over year, then chances are over time you are going to have a winner. Right? So for 3 years in this downward consolidation channel, you could have accumulated shares, and the whole time you could have had absolutely zero faith in this stock in the long term. And then as you see, over the years, it climbs all the way back up here into the 40s and the 50s. And just in about the last 2 years, the stock has gone from $70 and hit almost $1,100 a share here today. And this is why a lot of people might knock me, or anyone really, who tries to do the investing and the trading. People will always come out of the woodwork and try to look at your negatives. They'll try to look at your incorrect calls. Or, oh yeah, you made a good call on this stock, but when you mentioned calls on this other stock, they didn't work out. Listen. The short-term trading, again, has to be with speculative extra money, in my opinion. The bulk of your assets should be looking for stocks like this that are flying underneath the radar, that are building their business and maintaining the business. The stock price is not yet reflective of the true value of the stock. So what you need to do is buy and accumulate as many shares as you can before it absolutely takes off. And remember, even all the way up to here, 2022, 2015, right? So for 7 years, you could have talked shit and acted like we don't have a winner on our hands. This guy doesn't know how to analyze situations. You don't know your ass from your elbow. Why am I here? And then kaboom. Now the stock is more realistic, is no longer underneath the radar. Right? This whole time really was basically trending daily. Everyone was talking about it all of a sudden. Oh, have you seen SMCI? How much higher is it going? Could I still get in? Right? Now all of a sudden everyone's talking about it. It's in the spotlight. So the word is out. And once the word is out, we always see that next leg higher. And just remember, during this whole time frame, think about how many people lost faith, didn't remain confident in their analysis, or perhaps didn't understand the numbers that they were looking at and the potential growth that could come down the road. So yeah, it was very boring for several years. But if you accumulated a massive position between 42 and 16, your cost basis, I would assume, is about $30 a share. And now you can see you are up thousands of percent over the long run. Which is why, again, I appreciate the fact when we look at a lot of these companies, maybe they'll have a 20-30% run or a pop, and you guys, again, everyone's in a different situation, so you guys may have to take the money and run. I can appreciate that. But seeing this and then this, that is why I like to look at these smaller, under-the-radar, undervalued stocks. And sometimes they're brand name companies that just get forgotten about, like we saw with Rolls-Royce. But it's situations like this where potentially 1-2 of these positions can literally change your life and retire you and have you financially sound and stable, hopefully for the remainder of your life, so you can take care of yourself and your family and your loved ones. And it's all because you looked at the numbers, you ignored the bullshit, you remained confident in the future growth potential of the stock, and now all of a sudden it's on every trending page of every website you look at. There's massive articles coming out. Now all of these Johnny-come-latelys jump on YouTube and make the videos now after the fact. Right? But we knew to accumulate here. Just like SoundHound, right? SoundHound down $2 and change. It's at 190. It's at 170. Everyone in the short term is getting anxious, getting nervous. Should I hold it? I mean, should we buy more? What should I just take the loss? How am I supposed to play it? It's very simple, in my opinion. You accumulate as many shares as possible. You buy over time. If you started buying at $2.20, $2, and they dip it down to $1.60, you say thank you and add to the position and accumulate shares. And now we're seeing it. It's only in the short term, remember, because in my opinion, SoundHound is a much, much longer term play. But even here in the short term, if you just accumulated down at those dips and stayed confident in your analysis, you're up roughly 100% at least right now on SoundHound. And again, that's just the short term. You haven't even given it time like we've given SMCI. So, just wanted to do a quick update here on SMCI. And again, I appreciate the fact we just broke this line, and that's why I'm saying we could even pull back to the 700s or the 600s. But just remember, when it was 500 and got up to 700, a lot of people may have thought it ran too much. I'm up immediately. I'll take the money and run. And they didn't even see the real true value that you and I are seeing here. So if you did recently buy, or if you bought today and it might continue to go down, you should look at that, in my opinion, as an opportunity, not as a bad day, a bad call, bad timing. And just think about how many fools may have taken profits here at around the 800 level, not understanding what is potentially coming down the road, what has potentially not even happened yet. But let's switch over here to stock charts very quickly and I'll let you go. You can see the RSI, random ad, RSI flew to the moon here. Everyone and their brother began piling in again because we knew, in my opinion, that the fundamentals were just not matching up with the tremendous revenue growth that the company was bringing in. So everyone and their brother began jumping on board. People started making videos and talking about it in their discords, and the stock just hugged the top Bollinger Band. You can see the trumpeting as we climbed higher. I told you, when a stock pops high or drops low, the Bollinger Bands do that trumpet outward. And now you can see with consistent updates this whole time, this bottom Bollinger Band curled and is now climbing up nicely, and the bottom Bollinger Band will soon be 400, 500, 600. We can see now the mid Bollinger Band, just in the last couple of weeks, has gone from around the 320 range. The mid Bollinger Band on the daily is now up to $637.28. So yes, I can appreciate the fact in the short term, it may be a big percentage drop. But if we liked it at 1,000 and we like it at 800, we're going to love it down here at 600. So that's why, in my opinion, yes, the RSI eventually does have to come back down to earth. We're now sub that 70 benchmark. And if we do continue to sell off here into the 700s, in my eyes, I just look at it as an opportunity. That's the way I would look at it. MACD obviously flew to the moon, and we'll see how it trades the next couple of days. Look at the weekly here, RSI up above 90 here. So, we've had these run-ups before, and we have slightly continued, and then you can see the flattening, the consolidation, and then it takes the next leg higher. So that's why I'm saying, even here, if it wants to sell off down into the 700s or even like the mid-high 600s and just have a little downward consolidation channel, then chances are it is going to pop out and take that next leg higher, given a little bit of time, right? So it definitely was a high flyer. In my opinion, the stock going from 300 to over 1,000 is actually 110% justified, and in my eyes, it deserves to be there. So that's why, really, anything under 1,000, in my opinion, I would probably be a buyer. And again, my personal price target for the longer term, I am looking at over a $2,000 stock for Super Microcomputer Incorporated. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You all have a great weekend.